The economic crisis is only just beginning, according to my guest today, Peter Schiff, president of Euro-Pacific Capital, one of the first to see it coming. And Peter, there has been a sense of late that the economic data, the deceleration is starting to decline. Some people saying that maybe we're starting to bottom out here in the economy. You say no way.
Not a chance. Not a chance. As I said, this thing is just getting started. Remember, what's imploding is the entire phony American economy where Americans borrow money and spend it. And what's happened right now is the government is now taking on that mantle. The government is now borrowing and spending because Americans are too broke to do it. But what we're doing is making the problem worse. And when the bubble finally bursts in the bond market, and maybe it already has, judging by what's happened so far this month, quite substantially, if the dollar rolls over, which it should, and begins to fall, ultimately it's going to collapse. That's going to knock the rug out from under everything the government is doing, because when the bond bubble bursts, now the government needs a bailout, the government is broke, and that's when this crisis is really going to go into a whole new gear.
Well, because we're certainly not there yet, but at this point the government can still borrow for long-term at relatively low rates. Is your prescription that they shouldn't do anything?
No, of course. The last thing we need in this country is more borrowing. We need less borrowing. The government is trying to encourage more consumption when we're in trouble because of all the excess consumption. We actually need the tough medicine that the free market is trying to force upon us. We need Americans to spend less. We need less credit going to consumers to buy cars, to buy houses, to buy appliances. You know, that's what we need. We need people saving money. We need capital freed up for the private sector. We don't need more capital usurped by the public sector.
So, you know, you're maybe one of the few people I've heard who say that the stimulus bill, there are people who say that it's not going to do any good the way it's structured now. You're saying they shouldn't do a stimulus bill, period. Is
exactly. The stimulus is the worst thing they can do. It's actually going to stifle the economy. It's more of a depressant, because all the stimulus is going to do is put us in a deeper hole. We need the exact opposite of that stimulus. We need to really stimulate production and savings, and everything the government is doing is going to suppress that.
Interesting. So we have seen the savings rates start to tick up in this country.
Yes,
so
that's
the
a good
public,
thing.
that's a good thing. You're saying the public is doing it, but the government, they're just continuing to spend and spend more and more, going deeper into
Right,
debt.
and the government is trying to interfere with that process. We need the savings rate to go a lot higher. But of course, if Americans are saving their money, they can't spend it. And it means we're going to have a very severe recession. But that's the price we have to pay for years of reckless borrowing and spending. The government has to fess up, level with the American public, and let them know this is going to be tough. Because if the government continues on this course, they are going to create an inflationary depression that is going to be much worse than anything any of us have ever experienced.
And you think it would be worse than what's going to happen now if we continue along this path?
Yes,
right?
It's the exact opposite of what President Obama is saying. He's saying that it's going to be terrible unless we act. What I'm saying is if we don't act, it's still going to be terrible. But if we do act, it's going to be an unmitigated disaster.
So basically what you're saying is we need to totally change the way the structure of this economy is done, because it's built on consumers borrowing, consumers spending.
Well, that's the problem. It's built on a phony foundation. We have to let that foundation collapse so we can replace it with a more viable one. You know, we need to build an economy on underconsumption, on savings, and on production. That's the only viable economy. Just like Bernie Madoff's investment scheme couldn't work because it was a Ponzi scheme. Well, our economy can't work. It's a Ponzi economy. We have to let it collapse so we can replace it with a viable one.
Okay, and you said at the top that maybe the bond bubble has started to burst, and that's the first step in the next cycle downward. What time frame are you looking at to when the scenario you're seeing starts to unfold in a major way?
I think it'll unfold probably before the end of the year, if not in 2010. But when the government's ability to borrow is gone, and when interest rates really start to rise, now we're going to start to experience this crisis in a much higher degree. And of course, when the Fed is now going to be in a box where it has to raise interest rates and raise them aggressively, despite the fact that the economy is weakening, that home prices are falling. But if the Fed refuses to take responsibility and says, you know what, we're going to keep interest rates low no matter how bad inflation is, and if the Federal Reserve starts buying up all the debt that nobody around the world will touch, then
to this point, their balance sheet has expanded dramatically.
Then what we're going to have is hyperinflation. When I talk about hyperinflation, I'm not just talking about high inflation, double-digit inflation like we had in the 1970s. I'm talking about something a whole lot worse than that, something that they've experienced in countries like Latin America, That's what's going to be in store for us if the Fed refuses to raise interest rates.
Well, when you talk about hyperinflation, I always think of the Weimar Republic in Germany after World War I. People had wheelbarrows full of money to buy a loaf of bread. Is that what you're talking about?
That's what will happen if the government doesn't do the right thing. But, of course, doing the right thing is going to mean aggressively raising interest rates, despite the fact that unemployment is getting worse, that the economy is sinking deeper into recession. They're going to have to do what they're refusing to do now, which is going to be difficult, because if they did the right thing now, it wouldn't be nearly as painful as doing the right thing a year from now or 2 years from now.
You're saying take the tougher medicine now, but a lot of people would say if you do those things now, what is a recession here becomes a depression, that was some of the problems in the 1930s, that the Fed was too restrictive when the economy started to go down.
That's actually the opposite is true. Remember, the Great Depression was a result of government policy. First, Hoover was very much like George Bush. Hoover refused to allow the market to function. We had a bubble in the 1920s. That was the result of easy money policies, interest rates being too low during that time period. When the bubble burst, instead of allowing the natural correction of the market, which we had always done up until that point, Hoover was interventionist. He was very much anti-free market, anti-capitalism, which is not, the spin that's there today. Right. And so he tried everything under the sun. He had his own versions of bailouts and stimuluses. He didn't let the market work. He helped create the Depression. Then Roosevelt came in, initially critical of all the things that Hoover had done, but then when Roosevelt came to power, he did the same thing, only worse.
10 times more,
He came up with a New Deal, and now the Depression lasted for a whole decade. The worst part of the economy wasn't during Hoover's term, but in the Roosevelt term. And now you have the same situation where you have a Bush, who's the Hoover, who's helping to turn this downturn into a depression. And now you have Barack Obama coming in, promising more government, more of the stuff that Roosevelt did, and they could turn this into another Great Depression. The difference is the economy is in much worse shape going into this downturn than it was in the 1930s. And without a gold standard, without the discipline of gold, we have a central bank that could create massive inflation. And so, as I said, we're going to get an inflationary depression, which is much worse than the 1930s, because at least during the 1930s, consumer prices fell. And that made it easier on people who were unemployed or who lost money.
Right,
because
a nickel went a long way in the Great Depression, as my grandfather would always say. Yeah.
But what's going to happen now is during this depression, prices are going to be spiraling out of control.
Interesting. So on that happy note, we'll leave it there. We'll talk about what it means for investors. Peter, thanks very much.
Sure.